Welcome back to FT Markets. Europe has turned negative. Deliberate action by the European Central Bank has turned interest rates negative, not just for very short-term lending between banks, but also for government borrowing costs. With me to discuss this new topsy-turvy world is Nikolaos Panigirtzoglou, who is a strategist at JPMorgan. Nikolaos, welcome to the Financial Times. Why has the European Central Bank done this? It seems crazy, the idea that you lend money and get back less than you actually lend out. If we have a look at our first chart, yields have turned negative on German, Belgium, even Irish two-year bonds.
Yeah.
Why has the ECB done this?
It's about adding more monetary stimulus. And the ECB took a risk. It did something that other central banks didn't dare to do, to move policy rates, the deposit rate to negative.
Why is it dangerous? Exactly.
The conventional wisdom, and these are the arguments that both the Federal Reserve and the Bank of England used in the past, is that negative policy rates will be detrimental for money markets. That hasn't happened. So the ECB has, in a way, moved to uncharted territory and proved that actually modestly negative policy rates can work.
What were the dangers, actually? You mentioned money markets here. You mean lending between banks, but also presumably money market funds?
One of the arguments used by other central banks is that investors are not accustomed to negative rates. So if central banks cut rates to negative and money market rates move to negative territory, then naturally activity will collapse because investors do not want to transact in negative
Markets
rates.
would seize up. But if we look at our next chart, which you brought along, showing funds into European money market funds, these are data from two different sources. Actually, what we've seen, July, the latest figures, rates first went negative in June, of course. July, we actually saw inflows. Does this mean it's working?
It's early days, so we cannot yet say that the euro-denominated money fund industry won't suffer as a result of the depo rate cut. My personal opinion is that it will suffer. It will take some time. For example, when the ECB cut the depo rate to zero, the euro money market
overnight,
the euro money market fund industry started, shrinking from the summer of 2012. But, that shrinkage was gradual and it lasted almost a year and a half.
And if we look at turnovers in, the next chart is overnight money market rates. This is volumes. Volumes hardly affected. You can still at the same levels we saw prior to negative interest rates. Why, is that because actually negative interest rates don't make a difference? The sign, if you like, whether it's positive or negative, if they can still trade on a spread, the difference between lending and borrowing rates, then they can still make profit, presumably.
Exactly. One reason is that the interbank market, effective lending and borrowing funds between banks, it's a spread market. And the spread hasn't necessarily changed dramatically because the ECB cut the depo rate to minus 10 basis points in June or minus 20 in September.
Could the ECB, or should it, push them even further into negative territory to really give the economy a big demand shock?
There are practical problems, and that's why Draghi said that that's it in terms of the depo rate cut. The practical problem is that if the interest rate is even more negative, then economic agents, including banks, will start hoarding cash. And the central bank will have a very hard time to prevent that from happening.
You just take the money out of the bank and keep it as cash?
Indeed.
Oh, do you think other central banks could follow the ECB?
Yeah, I think they could. They should have done. Obviously now the Bank of England and the Federal Reserve, they are in a different path. They are in a path towards normalizing monetary policy. So maybe it's too late now for them to think about it. But what the ECB has proved is that modestly negative policy rates can work.
Because thank you very much. So a lesson there perhaps for other central banks if things get worse again, that negative interest rates can work as long as you don't push them too far into negative territory.